Hey guys, Chipotle just announced a 50-for-1 stock split, and in this video I want to break down all the details for you. And first of all, I got to talk about Chipotle. I mean, their influence and performance over the last few years has been outstanding, and they've been recognized globally for it. Chipotle was recognized actually as one of the world's most influential companies by Time 100. And they've been praised for their sustainable practices, helping farmers switch to organic produce, using renewable energy, and composting. And one thing that's super interesting about Chipotle is that their executive bonuses, the bonuses that their execs receive, are tied directly to their ESG goals. And also, you got to mention that their social media strategy, on point. It is savvy. I mean, if you've been on Facebook, Instagram, and you've seen anything from Chipotle, then you know they've just got a smash social media strategy. Amazing. Stock performance has been amazing as well, up 74% over the past year. That's absolutely mind-blowing. And I mean, they IPO'd in 2006. Their stock started out at $22 per share, and today it's approximately $2,798 for a share. That is a 12,000% increase since 2006. So for all you that bought in on Chipotle early on, I mean, congratulations. This is absolutely just mind-blowing. But I know you came to the video because you want to know about the stock split. And yeah, this is Chipotle's first time doing a stock split. They announced the plans to do a 50-for-1 stock split, which again is the first in the company's 30-year history, and it's one of the biggest stock splits in the New York Stock Exchange history. It's scheduled for shareholder approval because it does have to be approved by shareholders, but we're anticipating that it will be at their annual meeting on June 6th. And the shareholders of record as of June 18th, 2024 will receive 49 additional shares per share that is owned on June 25th. And the shares to trade, they'll be trading on a split adjusted basis starting June 26th. So there's your details. And I mean, we got to talk about the implications because Chipotle's doing a 50-for-1 stock split. What does it mean? Well, after the split, each share will be valued at around $56 per share. And that'll be down from the current about $2,800 per share. But there's no change in total value. So the way I try to explain this to everyone is that imagine that you've got a pizza, right? And you buy 2 pieces of pizza. And then the stock split happens. What happens is that your 2 pieces of pizza, they go in and they cut those 2 pieces of pizza in half. So now you have 4 pieces of pizza, right? They took your 2 pieces of pizza, they cut them in half. Now you have 4 pieces of pizza. But do you have any more pizza? The answer is no, of course, right? So your pieces are just smaller, but you have the same amount. And that's exactly what's going to happen after this stock split. No matter how many shares you had in Chipotle, you may have more shares now, but because they're worth less, you have the same total amount. Total amount remains the same regardless of the number of slices of pizza or shares of the company. However, there will be the potential for a temporary increase in share price. Even though the value stays the same, generally with these stock splits, there is a slight bump. And again, it's usually temporary because of this. And I think it's due to 2 major things. First of all, investor psychology. When investors are looking at this, they just see these big news clips of, hey, we're doing a 50-for-1. And it really says, hey, this company's doing well. The stock, I mean, it's up in the news. You clicked on this video today. Why? Because they're doing a 50-for-1 stock split. It's news. It's something that grabs your attention. And so because of that investor psychology, sometimes the stock price gets bumped a little bit. But also there's that perceived accessibility. In other words, I can afford $56 where maybe I couldn't afford $2,800. And it feels like the stock is cheaper and easier to afford, even though you're essentially buying the same amount of the company. So I think those 2 main things really play into it. And again, usually it's temporary because it'll level out after that. But you can't expect there was a big boost today on the news that Chipotle was doing the stock split. So there it is. You're going to have that temporary increase. Now, I want to look at some of the financial highlights and strategies when it comes to Chipotle. So, looking back at their performance in 2023, they generated $9.9 billion in revenue, almost $10 billion in revenue. That's a 14% increase year over year. Their diluted EPS is $44.34. That's up 38%. And the comparable restaurant sales were increased by 7.9%. Transactions were up by 5%. The average check increased by 2.9%. So that means the average order that people paid for, they went and bought some burritos, the average amount that they paid was up 2.9% in 2023. So that brings us to our market cap. Market cap is currently about $77 billion. I mean, it's just absolutely insane how the stock has exploded to this level. And I gotta say, we gotta look at the strategy. Some of the strategic initiatives that Chipotle is doing are really paying off. So Chipotle, Chipotle's drive-through strategy is absolutely a smash hit. It's very successful. They had 811 Chipotle in 2023, and they plan to add 200 more in 2024. And these Chipotle, these very quick drive-throughs are, you put your order in, and then you get to Chipotle, and you just go through the drive-through, and they have it ready for you. So it's like super fast. You don't have to get out of the car. But the idea and the reason it's a little bit different from other drive-throughs is because you're putting in your order early on the app, and then you just like fly through the drive-through. So they don't even call it a drive-through. It's a Chipotle. It's a Chipotle. Their digital strategy growth is also very rewarding. They have a rewards program, and that rewards program reached 36 million members in 2023, which was a 14% increase. And their digital orders represent about 37% of the total revenue already in 2024. 37% of all their orders are digital orders, which again is a testament to the digital revolution. And Chipotle is just sitting out there in front saying, hey guys, we're leading the way with how restaurants are going to change. So while the stock split itself isn't a direct reason to buy, Chipotle's continuous strong performance, their innovative strategies, their significant growth make Chipotle a compelling investment option. I do have to say, guys, I'm not personally invested in Chipotle at this point, but I do post all of my buys right here on this channel. So every single week I post a video about a stock that I did buy and give you reasoning on why I bought that stock. And that's my investing thesis, is to buy a stock every week. So every week, no matter if the market's good, no matter if the market's bad, I'm always there and I'm always buying something, and I'm always posting videos here telling y'all exactly about why I bought those stocks. If I ever do so, I'll post a video explaining why I'm selling the company as well. Anyway, guys, I hope y'all enjoyed this video. If you did, leave it a big like, subscribe, and I'll see y'all next time. Take it easy.